JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of December 2021. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay guys, so also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which is also updated on a daily basis. So you have to check it out here on jfdbank.com, and I think you can find some useful information here. So first of all, guys, I want to apologize for not running the videos on Tuesday, Wednesday, and Thursday. Basically, I have fallen ill a little bit. So I'm not really maybe feeling my best today still, but yep, hopefully we can get back on track, well, slowly. I mean, I do apologize for maybe a lack of enthusiasm maybe in my voice. It's just I'm trying to keep it a little bit on the lower side, so yeah, apologies for that, but yeah guys, let's see how this goes. Yeah, let's see. Excuse me. Oh, and sometimes I do apologize. I'll have to probably mute myself just yeah, to clear up my throat. But yeah, like I said, a lot of apologies, but I hope you'll understand. Right, now then, let's see what's happening with the markets here, the technical picture. So the oh, in Evo, yes. I mean, sorry, I didn't notice the comments there. Hi, hello everybody, hello Evo. I mean, hello everybody who's joining in. So yeah, am I back? Well, hopefully. Let's see how how I get along. But anyway, right, jumping into Nikkei as always. As you can see, the index continues to kind of move around here a little bit. However, on the 16th, yesterday, we saw the index pushing nicely to the upside. The index did push above this barrier, this 28,908 zone. We did climb higher, but yeah. It's a bit of a choppy session. It has been it has been a bit of a choppy session lately. So so yeah, the moment. I mean, it didn't stay above one of my barriers, so I think I need to reevaluate here things is again. So basically, this level has to go. So we did reach that, of course, and overshot as well that psychological 29,000 mark. But as you can see, we quickly kind of retraced back below it. The positive element here is that we're still trading above the 200-day EMA, and to be honest, of course, as we already know, that the index is closed for the week, and the week ended like this in the negative, I think, territory, if I'm not mistaken. Yeah. Yeah. So okay, we stayed below that 21-day EMA in our weekly chart. So to be honest, I mean, I understand this doesn't really paint a very positive picture to anybody, and for now, it's probably the safer option is to kind of keep an eye on some of the levels. I mean, of course, I have to admit that some of the levels are not working out as I would like them to work out, but hey, it is trading, and to be honest, lately we had, this week especially, we had a lot of central banks, and the market doesn't have any kind of stability right now. So, excuse me. Okay, let's see what's happening. So yeah, to be honest, I'm sorry, but with Nikkei, unfortunately, we'll have to just leave it there. Just leave it as it is at the moment. I mean, we're just, like I said, I'm just probably overall, I'm going to continue monitoring this potential kind of symmetrical triangle pattern, and then and then we'll go from there. Shanghai Composite very quickly on this one, and here you can see that we have this upside line taken from the low of the 10th of November. So I'm still keeping an eye on it. I mean, it travels nicely together with this 21-day EMA as well. You can see this 3,678 level did provide resistance nicely, and yep, we are seeing a bit of a retracement. So to be honest, for now, let's see if this upside line holds. If it does, then yes, a nice little rebound here could be possible. However, I would still prefer, maybe in that case, I would prefer to wait for a push back above this 3,678 territory in order to get a little bit more excited with the upside, just to be a little bit more on the safe side. With the downside, pretty straightforward. Basically, a break of this upside line is needed in order to maybe start aiming for lower levels. But even then, I mean, we would have like a bunch of obstacles here on the way lower, and we would keep an eye on some of them. Now jumping into the German index Dax. So yesterday, the index here. Let me have a quick look here. So we saw a bit of a decline. However, this decline kind of still was enough because, well, yeah, I mean, of course, we opened with a nice kind of gap to the upside, and we traveled strongly to the upside. However, as you can see here, the bulls were not able to kind of keep the index pushing higher, and as I talked about previously about this 15,834 level, I said that in a way, in order to get a little bit more comfortable with the upside, then certainly, yes, a break of that barrier is needed. At the moment, I would say, depending on how you look at it, I mean, if you're looking at your MT4, MT5 platforms, you might see a possible kind of bullish flag here. Now, I mean, we don't have this gap here, and we have this nice little pole here, this little corrective move lower, but let's see if that's going to be the case, because at the moment, although it is very attractive to kind of consider maybe this as a possible bullish flag, still I will be a little bit more on the careful side, just to kind of see how all this is going to play out, and in case we don't get any big surprises. I mean, at the moment we're already done with the Christmas rally, so now the question is what's going to happen further, and how the market is going to take the whole kind of the whole issue with the raising interest rates from central banks. I mean, we know that the UK was yesterday's BOE was the first one to kind of kind of go ahead and raise that after a while. So the Fed is of course also signaling this willingness to do that earlier. So if that's the case, I mean, we might see investors kind of starting to take profits, because as we know, I mean, higher interest rates are not very good for the equity world. So yep, that's why for now, long story short, we're just gonna keep an eye on it. Maybe we'll have a like a last maybe burst or something like that to the upside before maybe correcting nicely to the downside. Again, we'll go from what we have. I'm not going to try to over speculate on this one, because to be honest, I mean, this choppiness that we've seen here, yes, it's making everybody worry. So let's not rush into anything, and let's go slowly, step by step, and keep an eye on some of our barriers. Now, jumping into Nasdaq 100. Here we have an index that kind of drifted heavily to the downside yesterday. Of course, not a lot of well, not a lot of bulls enjoyed that. But the thing here is that when I talked about previously about this area near the 16,454, I said keep an eye on it, because basically we need a nice clear break above it in order to get a little bit more comfortable with the upside. But as you can see, instead we kind of failed to reach that, and we sold off heavily yesterday. So now I need to get rid of this downside line, although it's kind of playing out here. I mean, it's acting as a bit of a support here, so but I'll get rid of it. It's a bit messy now. It's more now something like a range here. So yeah, let's see how this is gonna play out, guys. For now, I mean, this is not ideal. I mean, we've overcame this this 15,900 territory, and I'll probably need to adjust some of my levels here, and one of those are going to be this one right here, this 15,742. That's the current lowest point of this week, and if we do drop below this area, then yes, we'll go for the downside, but again, we'll only aim initially for the current lowest point of December near the 15,543 level right here, and then we'll take it from there, because around here we have also the 100-day EMA, which could provide some temporary hold up. Now, jumping into DXY dollar index, DXY, it's well, yeah, of course I need to get rid of these lines here, no longer needed. Just bear with me one moment, guys. Okay, just a second. Let me mute myself a little bit here. Okay, sorry, apologies for going kind of silent there. Had to clear up my throat a little bit, but okay, coming back to DXY, the dollar index. So, as you can see, first of all, we're getting rid of all these lines because, to be honest, they kind of worked out a little bit, but not significantly. So, what I'm sticking to right now here is, first of all, this 21-day EMA, which we've which kind of like a magnet attracted the kind of the index back to itself, but also I'm keeping an eye on this 95.85 level, approximately around here. So if you're looking for some maybe a larger correction here to the downside, well, wait for that confirmation break here, guys. Just to like I said, just because it has been acting as a nice area of support. So yeah, if it gets broken, then well, we could slowly start aiming for this upside line. Of course, don't get me wrong, we do have a bunch of obstacles here, and in a way, maybe and maybe we're not even going to go to that upside line. Maybe just at the end, we will form something like this here, where basically it's going to be seen as a bit of a range here. So I'm giving you all these options so that you wouldn't, let's say, wouldn't be surprised later on, let's say, in case this suddenly becomes some sort of a range. So for example, if it drops below this 95.85 level and then drifts lower but struggles to overcome and or so let's just stay below this 95.50 territory, 52 zone, and then rebounds and pushes back up. So yeah, maybe so yeah, for now, long story short, like I said, let's see how all this is going to play out. Yeah, Evo. I mean, apologies for my my streaming. It seems to be fine, but sometimes it has interruptions. So I hope it will get recorded properly, and maybe if you've missed out on something, you could also watch it. Let's say after the video is done. So just to kind of maybe quickly double check something or something like that. But yeah, do apologize. I mean, technology does tend to kind of fail me a little bit, but yeah, hopefully I can pass on the message. Now, jumping into gold, and of course, big jump after the Fed. Beautiful explosion here to the upside. Initially, we sold off that day. This was the Fed here on the 15th of December, and then yeah, it quickly reversed. Then yesterday we saw a further push north. The bulls picked it up, and there we go. There we go. We are above this 1800 zone, so this is kind of working out according to the plan. Everything seems to be working nicely here. So yep. So far so good. So far so good. Yes. If we continue to trade above that 1800 level, then of course yes, I will aim for higher levels. Initially, I'll aim for that 1814 territory, and then yeah, so on, so on. My next target is this 1834 because, as you can see here, it acted as a fantastic area of resistance here back, or should say, the highest point of July and the highest point of September. WTI oil very quickly. So WTI oil. What do we have here? We have a commodity which managed to break its downside line. However, this 73.11 territory, as I mentioned it before to you, it is still providing a good hold up. And let's see. Yeah, we need that confirmation break. If that's, I mean, if that is how many times it's gonna test it and fail to break it, I mean, yeah, that becomes quite an important level here to watch. So this area right here is yes, I wouldn't say exactly the 73.11, but just maybe the area around it. So well, your style of trading, you guys, better. So you do kind of what you're comfortable with, but I would say if the body of the daily candle, excuse me, if the body of the daily candle remains above this 73.11 territory, approximately around here, then yes, we could go for some higher levels. For the downside, now this is where I'm going to get rid of this downside line first of all, and I'm going to just stick to this hurdle, this 69.47 territory, approximately around here. That's marked by the current lowest point of this week. It also coincides with the 200-day EMA, and yep, in a way, a nice good drop below it may lead to some lower levels. So keep that in mind. Ethereum, very quickly on that one. So I haven't looked at Ethereum for quite a while. But yeah, I mean, straight away, I mean, with just naked eye, you can see this this downside line here. I mean, don't get me wrong, it's a bit tentative, but hey, we'll keep that for now. Anything that can help us out here a little bit for the downside. Now, excuse me, for the downside. Although yes, we're still kind of, let's say, on a downtrend because we're forming these lower highs. I would say we're also forming lower lows, but we do have quite a bit of a space here to fill out. So I would say keep your eyes on this little inside swing high of the 14th of December, which is roughly around that 3,881 zone. We're currently resting here, but if we drop and stay below this, then yes, this could open the door towards slightly lower levels. We could go maybe towards this area, this 3,650 then, which is the low of this week, and then so on, and then maybe aiming for that 200-day EMA. But like I said, let's not rush into anything. I mean, for the upside, obviously, we need to see a break of that downside line here, and also maybe a push above this 4,180-182 zone, roughly around here, which I think. No, sorry, that's not the highest point of this week. The highest point of this week is roughly around here. Probably it would be better to even mark down instead of the latest one here. So the current highest point of this week is roughly around that 4,145 level. So yeah, if we clear this barrier, then at the same time, yes, we would break this downside line. We would be placed above the 21-day EMA, and potentially more buyers could join in. Now, jumping into a few pairs, guys. So one of my favorite one, of course, and I cannot not mention it. And yeah, AUD and ZD. Look at this. I mean, previously when I talked about it, I kind of drew this rising channel here, just kind of out of just for the sake of it, let's put it this way, because I thought, okay, let's see if it's actually going to respect it. And so far it is respecting this rising channel. I mean, because although yes, we do get these little kind of overshots here, but still at the end of the day, kind of the pair just kind of stays below the body of this candle, of the daily candle, stays below this upper side. Yeah, I mean, we could continue aiming higher here for now. I mean, even if we do see a bit of a retracement, I would say I'm still going to remain very positive if it stays somewhere above this downside line taken from the high of the 29th of March of this year, and then yeah, we'll go slowly on that. If we start dropping somewhere below this 1.05 territory, now that's where yeah, we could consider maybe a bit of a larger correction to the downside. Okay, sorry, I had to clear up my throat again. US dollar against the Turkish lira. Now talk about a disaster. I'm not already touching the euro Turkish lira. I mean, but that's even in higher outer space. I mean, but this is just a nightmare for the. I mean, okay. A nightmare and not. So it depends on, of course, which group of people you're kind of reaching out to. So I mean, of course, understandable. All this makes the Turkish export very, very attractive, and of course, this is the way of how Erdogan decides to maybe attract foreign investment. However, you understand that people are suffering, and you understand that this is not good for the general public, and I mean, to see such inflation when they cannot really trust their own currency and have to kind of result to exchanging all their currency into their domestic currency, their money, into something more stable. So yeah, this doesn't kind of paint a very positive picture, let's put it this way. I mean, hopefully, I mean, they can do something about it, but this is just insane. I mean, if I'm gonna jump into a monthly chart, I mean, here, yeah, you can see this huge spike. I mean, it's like a crypto. It's like a crypto in in those 2008 or 18, sorry. So let's see where this is gonna go, because of course, at one point, yeah, they will continue running this, but will they have to resort to some sort of a default? But again, let's wait and see, because at the moment it's very unpredictable what's going to happen here. And if you're trying to short this, and I do understand, I do feel you, and this is very, very tempting to try and maybe short this, but again, guys, I mean, it's just, this is hyperbolic, and this is just insane. So just continue observing this one. It may present itself with an opportunity, but again, we need some sort of maybe better confirmation here. But at the moment, it's very difficult. Every day, it seems like a new all-time high for this one. US dollar against the Japanese yen. So the pair is not really the most exciting one right now. Yes, we climbed above this 113.93 level, but stayed above it, but then the next day we drifted back down. So to be honest, it's not the ideal scenario here, and I'm trying to kind of see technically what could happen here. But of course, we do have we had the BOJ coming out today. I mean, they kept their interest rates, of course, but let's see. Excuse me. For now, I mean, it's quite calm, this pair is, but I think this is going to remain more vulnerable to the overall equity situation in the world, because again, I think that that's when we'll see maybe bigger moves in this pair, if the equity market decides to, or not, sorry, not doesn't decide, but if the equity market sells off heavily. Well, I mean, we could see this pair drifting nicely to the downside towards this upside support line, initially taken from the low of the 6th of January, excuse me, and then so on, so on. Excuse me. Oh, okay. So yeah, apologies for my coughing, as I mentioned in the beginning of this video. I mean, that's the reason I had to postpone some of my videos. So yeah, let's see if we can if I can get back on track now. The way we could play it out, and if you are you're an enthusiast of this pair, I mean, you do like to trade this pair now. Of course, be very careful. For now, we're just oscillating around that 21-day EMA, and we're sitting below it a little bit. So I would say it has now a bigger chance to go a little bit lower. But that said, we need to be, like I said, we need to be very careful and continue monitoring the situation around the equity markets, and then yeah, we'll go slowly on that. Guys, I think I just forgot about the time totally here, and I think I need to jump off very quickly. So I hope my colleague will forgive me, but basically, I didn't even notice what time it was already. So Gbp Usd. So this one popped nicely, of course, as BOE managed to increase their interest rates, so that the market took it as a positive here. Gbp Usd traders, and yep, and for now, I would say as long as it stays above this 21-day EMA, we'll continue aiming higher. Oh, and I'll jump into EURUSD very quickly. Apologies for that. Actually, sorry, EuroCAD. Guys, EuroCAD, we're coming closer to this barrier, so this 1.4554, and then yeah, if we do clear that this barrier, then yes, I'll go for some higher levels. So, but at the moment, I'm not really liking this pair. It's very, very choppy. And yeah, as I said, finally EURUSD. We're also coming closer to this barrier, this 1.1360. I've redrawn this a little bit because, again, to just show maybe a better picture. So at the moment, as you can see, we're in this little range. So let's see which way we're gonna break out to. At the moment, we're closer to the upper side of this range, and if we do pop above it, then yes, we'll go for a larger correction to the upside. So guys, I'll have to kind of jump off the mic here. I do apologize, didn't really notice the time. So yeah, like I said, I hope my colleague is not going to be very mad on me, but yeah, thank you very much for joining in and watching this one till the end. I really appreciate that, guys. And if you want to catch me on Monday, as always, at my Traders Espresso, I'll try to run that one. Hopefully I can feel better a little bit. Yeah, see you on Monday, guys, 7 o'clock GMT time. Thank you very much, and bye-bye.